Welcome to the Osborne Financial Group podcast, hosted by Jared Osborne. Join us for expert insights on wealth management strategies, essential tips for securing your financial future, and in-depth discussions on life and health insurance options. Get practical advice for protecting your assets and loved ones, proven strategies for maximizing investments, and real-life examples to illustrate key concepts. Stay tuned for Q&A sessions with industry professionals and actionable steps to take control of your finances and insurance needs. Tune in now and empower your financial journey.
Well, hello, everyone, and welcome back to another episode of the Osborne Financial Group podcast. I am your co-host, Jeremy Wolf, joined by your host, of course. We have Jared Osborne in the house. Jared, good to see you as always, brother.
Thank you. Hello, everybody. Happy Thanksgiving to everybody out there.
Yeah, off the heels of Thanksgiving, I am incredibly grateful. Had a wonderful time with the family. I hope you had a great time as well. And we are back at it today with another topic. Now, this is something that I've not had any personal experience with, but I do have a very good friend of mine that had to utilize this type of insurance. And what I'm talking about is disability insurance. I think most folks out there, they hear disability insurance. The first thing that comes to mind for me is you get injured and insurance kicks in, pays for it. Let's take a deep dive into that, though, Jared. Explain for our listeners a little bit about what disability insurance is.
Okay. Disability insurance is basically what you said. You were to get disabled. It's basically an income replacement. Okay. For those who work, you may get this on a group level, which is typically a lot cheaper. We'll get into that. But basically, it's there in case whether you get into an accident, whether you have a health issue, things like that, and you can't go back to work and do what you do, whether it be full-time or even part-time on some policies. They will pay you a portion of your income, typically 60%. And like I said, you can get this on a group level if your company offers it, or you can get this on an individual level. And there are major differences between the two.
So why don't you go into that a little bit further, the differences between the individual and the group?
Right. So group insurance, if they do offer it through work, there's typically two types of disability policies. There's short-term and there's long-term. Obviously, the short-term is going to cover you for typically 2 to 3 months, depending on the policy. Okay. It'll be a weekly income replacement. And like I said, around some are 50, most are 60%. So let's say, for example, you make $1,000 per week and you can't go to work. And I'm not talking about you're sick for a week or two. I'm talking about you can't go back, something like maternity. Most policies cover maternity. You can't go back to work. You're on maternity leave for 4, 5, 6 weeks, depending on the policy and depending on the type of pregnancy. They will pay you typically anywhere from 50 to 60% of your weekly income. Those policies are typically offered by the company. You usually can't get short-term disability policies on the individual level. Okay. And when they're on the group level, they're tied to the income, obviously, that you're getting through that company. The good thing about short and long-term disability from a group level is that the underwriting is pretty much guaranteed issue. Okay. So they'll look back at obviously certain pre-existing conditions. It's not as stringent as getting an individual policy. I'll get into that a little more. They're typically guaranteed issue, which means that even if you have some issues, they're going to approve you, okay, because of the group. It's on a group chassis, okay, the law of large numbers. They have a lot more people to insure, and so they spread the risk out, okay. Whereas an individual policy, they're going to do stringent underwriting. It's just you getting the policy, and they will get very specific with underwriting and very stringent. The short-term disability, like I said, if you have maternity, it'll cover 60% of your weekly income. For example, you make $1,000 a week, you're going to get $600 paid directly from the insurance company. Now, if it's paid through payroll, okay, or pre-tax, typically, the benefit that you get, okay, that in this case $600 a week, okay, is typically taxable, okay, because you're getting that pre-tax benefit. That's what most health type of insurance is. You get through work, it's done pre-tax. When you get it on an individual level and you write it, you pay for it directly, not through your business, but you pay for it after tax dollars. On an individual policy, if you get it and you're on claim, the benefits are tax-free. So there is a difference. Now, also, when it comes to disability on a group level, the policy is the policy. You can't structure the policy to your benefit as opposed to like an individual policy where you can add certain things, riders, all these.
You get what you get when it's a group, basically.
Right. You get what you get. The other thing is, if you leave the company, it's not what's called portable. You can't take like a life insurance policy because it's tied to the income at that work. So if you leave and you're not working there anymore, you're not getting an income from the company. You may not even have an income unless you're going right to another job. They offer another disability policy, you can jump on that policy. So that's short-term disability. Just to get they're typically done through a group. They're relatively inexpensive to get on the group level. They cover those typically 6 to 10 to 12 weeks of disability. And like I said, if you had a shoulder surgery and you're at 2 weeks, the issue with them is there's also there's what's called a waiting period or an elimination period, they call it. So usually it could be a few days. Typically it's 7 days, 10 days. Basically what that means is if you go on disability, even a short term, for the first 7 days or whatever that elimination period is, typically 7, sometimes it's 10, sometimes it's 2 weeks. For those 7 to 2 weeks, the clock starts when you get disabled, but basically you have to wait in order to get paid through that elimination period, through that waiting period. So if it's 7 days, you'll start getting paid on the 8th day. Okay. So that's why these things are not for a week, 10 days being on disability. I guess you can file a claim if you're out for 2 weeks and get paid for a week. Yeah, that's not a problem. But if you're out for 4 or 5, 6, 7 days, these policies typically have a waiting period. So that's, and so does individual, and we'll get into that. So really, this is for a maternity. God forbid you had a stroke and you're out for 4, 6, 7 weeks. You have that disability to pay that to cover 60% typically of your weekly income. And then if you need it longer, that's when the long-term disability kicks in.
So Jared, when you sit down with a potential client or existing client and you're putting together a comprehensive strategy for insurance, what types of factors do you consider when suggesting somebody actually purchase disability insurance? Because I know obviously if you get it from work, you get it from work, but if you don't, like that's something that I'd imagine is not on the radar for most people because it's like with any insurance, right? You don't need it unless something happens. What are you typically looking at, and when are you recommending to clients that they should pull that into their umbrella?
If they don't get it through work, okay, it's to me disability insurance, and I'm not saying this because I'm an agent. Okay, I'm a product of my father was on disability. My dad was a physician. He had arthritic hands, and he couldn't manipulate any longer. And my father had a very big disability policies, and thank God for that, because he really couldn't manipulate his patients anymore. He couldn't use his hands. Now, these policies, the cool thing about them, if structured correctly, you get what's called an own occupation policy. So my father, just giving you an example, went on disability at age 50. He had a very successful practice. And although he couldn't manipulate anymore, he was able to still run his practice. So he was able to promote the practice. He hired somebody to see the patients, but was able to run his practice, promote it, and still get paid. I wouldn't think they would cover that. I think you can, especially if you get what's called an own occupation policy.
Interesting.
Yes. And so when I sit down with somebody, especially somebody who owns a business, who's, typically making 6 figures, even if they're making 70, 80 grand, it's something to consider, has a family, has bills, that's their sole income, that business, it's probably more important than life insurance, because a disability policy is a living death benefit. If you can't go back to work, okay, whether it be for full time or it could be for a year or 2 or even forever, okay, because you have a major situation or major issue, you can't work, okay, and even if you can go back to work part time, you can get paid on these policies. It's just as important, because also another thing is statistically the chances of becoming disabled when you're 20, 30, 40, 50 is much greater than you dying. And you say it'll never happen to me. Okay. And hopefully it never does and probably won't, but it should be part of every financial plan. No doubt if you're a business owner, if you don't get it through, if you work for a big company, you don't get it through them. Most big companies do offer it. But even if you work for a big company and they offer disability, unless you're upper management, which they discriminate a little bit, which are allowed to, you have certain limits on your policies. You usually it's okay, we'll pay you 60% of your, on a long-term disability policy, 60% of your monthly income until you reach $8,000 a month, meaning that if you're making 13,000, that a month, we'll pay you that 60% up to $8,000 benefit. But there's some people making 3, 4, 5, 600,000, and $100,000 or $96,000, 8,000 a month is not going to cover their bills. And so, yes, it's very important. I bring it up all the time for most clients in those scenarios, doctors and lawyers especially. Okay. Sometimes they'll look at it and say, wow, this is just another bill I have to get. And I'm like, yeah, but let's look at the scenario. Let's look at the situation. Let's look at reality. Something happens. You have a mortgage. You're 45 years old, 40 years old, 35 years old. You're relatively healthy. It's a must have. Okay. The thing about disability, when you talk, even compared to life insurance, is that the underwriting is even more stringent, believe it or not, than life insurance. And the reason for that is because, like I said, you can have a high cholesterol, but you can get these things with those disabilities, not a big deal. But if you have a bad back, it's not going to affect your life insurance or underwriting. You'll get a life insurance plan, no problem. But when you have a bad back with disability, they may exclude it, or they may say in 2 years we'll reconsider it. Okay, so those type of things. And mental health, which everybody seems to have something these days, joking around like they take anti-anxiety medication or this or that. They look at those things and they will exclude. That's very big, because, not to get too crazy about the history of disability, there's only about a handful of disability carriers left in the market. The reason why is because in the 80s and 90s, not to pick on dentists and chiropractors, those type of, but there was no limitations to getting a disability policy in the 80s. There was no mental health. What was mental health in the 80s? Nobody knew about mental health. Nobody cared. Nobody went to psych. There was nothing. There was no limitations on it. There was really, the underwriting wasn't very stringent. What was happening is, and I mentioned chiropractors and dentists because they were a big percentage of the individuals, and some of them were, most of them were normal, valid claims. But what was happening is everybody was saying, I have mental health issues, I have anxiety, I can't work. And they had to pay those claims. Okay. And so what happened was a lot of these companies went out of business, or they merged with one another because they were getting such huge, kind of like long-term care. We talked about it in one of our other podcasts, that the industry just actuarially didn't price these policies correctly, or didn't realize, this can be an issue, and they really got hurt. And so, a lot of them went out of business, or they merged with other companies, but it's very stringent. Even I know very healthy people that just did a policy the other day. She had like asthma or something, so they excluded it. Like, I don't know if you can become disabled from asthma, but anything you have a disability, they will look at. And I always say, when we start the process for disability, and typically they're getting in conjunction with a life insurance policy at the same time, I always say, please don't hate me for what's about to happen, because these companies are going to, quote unquote, give you a colonoscopy, not a real colonoscopy, but they're going to look at your medical records. They're going to look at your driver's record. They're going to look at your, obviously, bankruptcy, stuff like that. And they just want to make sure that, soup to nuts, you are clean. And if you're not, that you can't get it, but they will exclude it, or they may rate you up, or they will decline you. And so that's the issue with disability insurance.
You mentioned a lot about life insurance, and I know life insurance, you have term insurance and whole insurance. Is there an analog in the disability world to a more whole product where if you don't end up using it, you could actually accumulate a return on the investment?
Great question. I get it asked all the time. It's basically like an auto policy. Pay the monthly premium or the annual premium, quarterly, however you want to pay it. If you never use it, you lose it. There's no type of policy that builds up cash value, or you can use it for something else. It's really black and white. You pay a premium, you get to this. Now, there's certain factors aside from health that's going to affect your age, obviously. So the younger you get it, the much more inexpensive it's going to be. I'm talking huge. Your health, obviously. The benefit, if you're making $500,000, okay, you could probably qualify anywhere from in the $200,000 to $300,000 range of coverage. It's going to be obviously going to be a lot more expensive than if you qualify for $5,000 a month or $6,000 a month. So my brother, who's a surgeon, has several policies. So that's another thing when you start your career and you want to get disability in your 20s, which is a good idea, you get a policy. And then as you start hopefully making more money, you basically, usually I have a conversation, say, okay, you're making $200,000 more than you were 10 years ago. You need more disability. Now, there are certain things on a disability policy like future increase riders or guaranteed where you can increase it without going through underwriting automatically. It's a rider on these policies, and a rider is something extra you pay for. But those have limitations. So they may allow you to increase it $5,000 a month over the first few years or first 5-10 years of the policy without going through underwriting. Basically, what's going to happen is they'll allow you to increase it $1,000 or $2,000 or $3,000 of income a month, like your benefit. You'll pay the higher premium. You don't have to go through underwriting, but some people need significantly more. So what happens is a lot of doctors and lawyers, as they further their career and make more money, like my brother, just for an example, he's a surgeon. He has 4 policies. Me, myself, as an agent advisor, I have 3 policies because I got them when I was very young. Then I got another policy, and then I got another policy. Now, some are bigger than others. They're not exactly the same, but the aggregate is a certain amount every month. And really, they all kind of work the same. Some are more expensive because I was older when I got them, but you have to qualify for them. You can't just say, it's based on, they're going to look at your taxes, a year or 2 of taxes. Again, talking about really getting in deep with life insurance. They don't really care unless you're getting $10 million and they want to justify your income. You have to, justify getting that amount of death benefit. But for disability, you're making $100,000 and then 3 or 4 years later, you're making $200,000. They're going to want to see that their taxes, to justify. It's usually not a big deal, but they will want to see that. So yeah, it gets a little intrusive. And I always explain to clients, just get ready because I'm just the messenger.
Get ready, baby.
I'm going to facilitate this process for you, but it's annoying, to be honest.
So once I had a question for you. This is something that my buddy that has been on disability insurance for some time now has experienced. Once the event triggers the policy, you get injured, whatever happens, whatever condition, are there limits imposed? Like, how does the insurance company determine how long you can be paid for? Obviously, the goal would be hopefully to get healthy and go back to work.
Right.
What do they do to maintain that? Are there any limits if you have a condition that makes you unable to work for the rest of your life? Does the policy typically cover that? And how do they check in on you, if you will? Like, is there monthly reporting? How does that work?
Great question. So the old policies used to pay for life. Like my father, he got these 30 years ago.
Just indefinite. Those
are forever. He's still getting paid. He's 80 years old. He's still getting paid. Okay. And the newer policies typically pay to age 65 to 67. Another thing that they lessened on these policies during the 80s and 90s, when these companies were getting killed, because they were on a hook for paying people like my dad forever. Okay. Now, my father, let's just say my dad went on disability when he's 50, he's 80 years old. So you're talking 30 years of him getting paid. Let's just call it's more, but let's just say he gets paid $10,000 a month. Think about that. They've paid him.
That's a lot.
They paid him $120,000 a year tax-free for the past 30 years. So think about that. It's over $3 million that they paid him. Now, he has to go to the doctor annually because his hands are arthritic. Just justify that he still has arthritic hands. And they can and will sometimes check on you. There's a lot of fraud in this business. It's bad. And so I've heard stories where they have people run disability. They're getting disability. And this happens on the group or individual. And they have bad back or they're saying they have disability for whatever. And they're outside moving bricks from their yard. And so they can do that. Those are more the extreme cases. But yeah, they will check on it. With my father, they'll check in on you if you're on claim. They're not trying to scare you. They just want to make sure that they're paying you and you're still disabled. Now, going back to that, on these policies, typically is what's called the residual disability rider, typically free with the policy. Sometimes you pay for it. And what that is basically the carrier, if you're on claim and you can go back to work 50% of the time, for example, they will say, okay, you can go back to work and we'll still pay you 50% of your benefit, but you can still work. Okay. Or if you, like I said before, if you have an own occupation problem, like my father, he was still able to run his practice. Okay. He just couldn't see patients. He could see patients and talk to them about, if it was a legal situation, where there was some sort of legal stuff going on, He can talk to them about it. He just couldn't manipulate. So he was able to, run his practice, still make money, but he just wasn't able to manipulate. So those are own occupation policies. So I always tell people, and I always push them in that direction, make sure you get what's called an own OC policy. That if you can't do what you do, for example, if my father wanted to go teach, he can go teach. He could be a professor somewhere, but he just couldn't manipulate his patients. Okay. So he could still get paid from the disability company and work at another full-time job, but if he can't do what he does, then they'll still pay. Okay. So that's how that works.
Very interesting. So that seems, so the own OC policy would be more for business owner.
Absolutely. And also and when you do the application, they always say, please in detail, explain exactly what I always say, get very detailed. If you're a doctor or a lawyer, you try cases, you're on your feet a lot, you're up in a courtroom, you actually are a trial attorney, you sit and have to focus every single day. I say, get very specific. Not that they're going to say, oh, you weren't very specific on the application, but I always like to just be very detailed during the application process. So there's no even confusion at all. So I get very specific on the application. I tell them to be very specific of what you do. But yes, it's very specific. Business owners, people always say to me, like for me, for example, I sit at a desk for the most, I see clients, I'm on the road. They're like, if you became disabled, you can really do what you do. I'm like, you would think so. If I had a stroke or if I have something, an autoimmune, I'm getting tired, I can't talk to people. I can't focus. I should be on this. It should be able to collect disability. So just because you sit at a desk or, that you're not physical or you have to be up and about doesn't mean that your disability policy is not going to pay. You could still get paid sitting at a desk just because you get hit, you get an accident, you have a brain injury, you can't focus as much. Yes, it's people always give me that. Now, I always get the one thing about disability on an individual level, it is expensive. Right? There's no beating around the bush. It's compared to life insurance. Life insurance, if you get a term policy, is relatively cheap. Okay.
Yeah, you could pay 30, 40, $50 a month, that kind of thing.
Yeah, disability, you're talking hundreds of dollars
a month. Yeah.
Okay? Because like I said, like my father, you get disabled when you're 40, 30, and they have to pay this for 30, 40 years. And it's $5-10 grand a month, sometimes more. Think about it. That's millions of dollars that they are on the hook for, and they have to pay it. So and also statistically, it's a greater chance of you becoming disabled than dying at a young age. Okay. So it's a very necessary evil. It's when you're a business owner and you can't work and you're the sole breadwinner, even if your wife works or your husband works and they're not the sole provider, it could be a problem. And so it should be, especially for people who are making six figures, it's very important. It's very important. Even if you don't get the maximum amount, if you're making $200,000, you say, you know what, let's just apply for $6,000-7,000 a month of it. Get something. Get enough to cover your mortgage, to cover your food bill, the necessities at least. But it's definitely part of a very important, intricate part of a financial plan. Okay. So I'm a big proponent of it. I lived it my life.
Yeah.
So
it's so important to sit down and have these conversations. And even for somebody that maybe isn't in a position of great wealth, just to start thinking about this stuff early and having these conversations and planning is just so beneficial. Because like you said, you can get some of these products a lot cheaper when you're, well, no, maybe not this one, but some of the other insurance and other things you could do, you can get a lot cheaper when you're younger. Yeah.
And also just to back one time, because there's only a handful of these carriers on the market, maybe 5, 6, 7, really. It's not like life insurance where it's like you can pretty much go with any carrier with term or something, unless it's a specific type of condition that certain carriers are better underwriting for. The policies are broken down by class. So if you're a doctor or a lawyer, there's certain policies, and this is why we talk about needing an agent. You have to make sure that you're getting the correct policy for your class of occupation, because that's another factor. It's certain carriers won't even write doctors. Certain carriers are better with doctors than others. So you got to make sure. And also when you look at these policies, there's a lot of different riders and things you can add to these policies that I believe a lot you do need. And there's some that you really don't. you got to just make sure that you're talking to somebody who knows this business, who's knowledgeable, because they can get a little confusing.
Yeah, the rabbit hole certainly runs deep in the insurance space. Why it's all the more important to have a professional such as yourself to guide you through that process. Anything we missed on this topic? I know we could probably go on for ages.
Yeah, I mean, I could talk. I think that's the basic. Just I always a lot of my clients call me. They start working for a company and they send me their benefit package because they don't understand it like most people. They get these benefit packages.
Confusing, man. All the insurance, it's confusing.
Yeah,
you look
it's
at the
very confusing. So I think,
to make your head spin.
100%. And big companies, they offer the critical illness, the accident policy, the cancer policies. And I'm like, oh God, like it's great that they offer all these things, but like really get the 100% get the disabilities, the short and long term. I always say definitely obviously get the health insurance, and I'll point them in the right direction on which policy to get. All those other dental vision, okay, if you need it, if you want it. But the critical illness, again, not that you shouldn't get them, but like it gets crazy. You start insuring everything. But I always start, I just talked to my niece who started working in New York. And I said, just make sure you get the disability and the health insurance. Start there. And then it's very important. It's very important. So yeah, that's really, like I said, we can talk about this a lot more, but just make sure the one thing I would say, take away from this podcast is at least look at it, consider it, have a conversation about it, whether you go forward with it or not. There's a lot of different factors, obviously budget and things like that, but have the conversation. Okay. And that's what I would tell you to do.
All right. Good stuff. As always, if anyone has any comments, if there's any subjects that you'd like us to address, drop it in the comments below. As always, thanks for tuning in, and we'll look forward to seeing you on the next episode of the Osborne Financial Group podcast. Everyone take care. Have a wonderful day.
Have a great day, everybody. Thank you.
Thanks for tuning in to the Osborne Financial Group podcast. For more financial tips and personal advice, visit us at www.osbornefinancial.com. That's www.osbornefinancial.com. Or give us a call at 954-963-3300. Take charge of your financial future today.